Well, on that note, let's get our guest on board then. We've got Chandan Taparia, who's a technical and derivatives analyst at Motilal Oswal. Chandan, thanks very much for joining us. From the current levels of Nifty, where we've touched fresh 52-week high, just about a few points away from that historic 9,000 mark, do we see that mark coming in the coming sessions?
Yes, Nifty has been making higher tops, higher bottom formation from last couple of weeks, and it has registered a fresh 52 weeks high of 8982 levels. Index has been moving upwards and holding the gains from last 5 to 6 trading session, and the immediate trend may remain intact till it holds the support trend line. In the entire series, Nifty closed positive by around 4%, traded around 150 points higher than its volume weightage average. So overall sentiment is positive till it holds above the immediate support trend line of 8820. The momentum may continue. It has to respect 8880 to continue its up move towards 9,000 and then fresh move towards its lifetime high of 9119 kind of level. So overall the trend is positive till it holds support of 8820. We are suggesting to buy on decline strategy in the market.
All right, buy on dips is the call coming on Nifty. Chandan, if I look at the FIs, they've actually come back in the month of February, where for the last 4 months there was some kind of FI selling. At least on the cash side, we've seen some buying coming back in the month of February. Tell us, how is the setup looking for the March series by FIs?
Yes, Nifty has been performing well from last 3 series. However, FI's flow was not much encouraging compared to the DI's flow in the market. And main market movement was led by the DI's positive activity. However, FIs also participate in the market rally. They have taken long position in the index future, while some long position was also witnessed in the stock future segment. So overall, the flow is taking market on the higher side. Now, if FIs are coming back with the bulk buying, then this rally can start the fresh move towards its new lifetime high. So the flow is more important in the market, and this market is moving upwards because of the liquidity and the bullish undertone. However, it has rallied by more than 1,000 points from the recent low of around 7,900 zone. But till the trend remains intact and the flow remains continuing in the market, I think this leg of rally may see the momentum towards 91 and then much higher level.
All right, clearly, well, it has been a liquidity-driven rally, but let's talk about Bank Nifty, which touched its record levels during the February series. In fact, we've had 2 record closings also for Bank Nifty. What's the call on Bank Nifty coming about? What kind of levels can one expect in the March series?
Yes, Bank Nifty registered a record lifetime high of 21,042 in this series. It is up by around 7% compared to the Nifty gain of around 4%. So it is continuously outperforming the broader market and taking the lead to take the overall market on the higher side. Overall longs are intact. However, rollover was slightly lower compared to the Nifty, but the momentum and the trend is positive. Supports are shifting on the higher side. Earlier it was respecting to a support of 20,000. We have also seen the significant put writing at those levels, and now that support has shifted to 20,250 kind of level. So shifting support on the higher side clearly indicates the positive momentum may continue. Now it has to surpass and hold about 21,000 zone to continue its rally towards 21,500, 21,750 kind of levels.
All right, clearly, well, Bank Nifty has been outperforming. If you look at Bank Nifty this year, it's up nearly 15%, and that's the reason why we've seen that kind of bump up coming on Nifty as well. So good going there for Bank Nifty. That's closed the week at levels of about 20,876, and it touched record highs on back of that gap up opening, which we got to see on one of the trading sessions for HDFC Bank. Let's see how it pans out in the March series. But on that note, we will slip into a short break. Don't go anywhere. On the other side, we'll get you stock and sector-specific strategies from Chandan. Stay tuned. Welcome back. You're still watching World of Derivatives right here with us, and Chandan Taparia is still there. We'll get to him and get his views on specific stocks as well as sectors. Chandan, talking about the banking stocks, we've already discussed Bank Nifty. We've seen good gains coming in from Axis Bank, though the numbers were bad for the third quarter. But after a few sessions, we've seen that good buying momentum which came back for Axis Bank. Tell us, what would your picks be in the banking space?
Yes, in banking counter, Axis Bank has done well. It has given a price volume breakout with the huge unwinding in 500 call. We have seen open interest addition by around 10 to 15%, which clearly indicates that fresh longs are added into the counter. So recommending to go long on a small decline with a stop loss of 508 and expecting it to rally towards 570. ICICI Bank would be the other counter. Earlier it was finding hurdle near to 275, but in last couple of trading sessions, it has managed to respect the same zone which earlier used to work as a hurdle zone. So it's a classical example of resistance turning as a support. So because of that, we are expecting this stock to move on higher side, recommending to buy on decline with a stop loss of 275 for the target towards 300 levels.
Right. Chandan, we've seen good gains coming in for DCB Bank as well. In the last 1 month, that stock's gained nearly 27%. How is the chart of DCB looking, and would you advise traders to enter this stock at current levels?
Talking about the DCB Bank, this stock was up by around 30% in the entire series. It has given a fresh breakout, overall higher top, higher bottom formation. And I think till it holds the immediate support of 148 zone, the momentum may remain intact. And especially we have seen buying interest in most of the private and the mid-cap PSU banks stocks. And I think this rally was driven and supported by all these stocks. And that was the reason that Bank Nifty hit this record lifetime high. So I think overall bullish undertone and the positive momentum may continue in the counter.
Right, and let's talk about a space which has been under pressure, where the valuations have actually corrected. In fact, from December lows, there are two sectors which have not performed that well, and that is IT and pharma. Let's discuss pharma first with you, Chandan. Which are the stocks, according to you, which on the chart may perform better in the March series, and are there any calls which you would like to tell us?
Talking about the pharma, most of these stocks have seen some bottom formation, recovered from the lower levels led by the short covering or the support based buying. Talking about the pharma, Lupin has multiple support near to 1400 zone, while Oro Pharma is having multiple support near to 630 kind of level. So support based buying might be seen on decline, but overall we are not having any aggressive view on the entire sector. So let the sector stable, let this stock to be stable to take an aggressive or the convincing call in the counter. But those who are looking for buying in only this sector can go with Lupin and Oro Pharma on buy on decline strategy, as they are having multiple support at small decline from the current zone.
Right. Chandan, there are two stocks in this sector which have corrected quite sharply if you, look at them from their lifetime highs. One is Sun Pharma and the other is Divi's Laboratories. We've seen some kind of, momentum coming back into Sun Pharma, and Divi's too has just bounced back from its lows, 52-week low, which we got to see. How are the charts of these two stocks looking?
Talking about the pharma counter, as I mentioned, that a short-term bottom is processed in the counter for the trading point of view, but still the conviction and the follow buying is missing. Talking about the Divi's Lab, this stock has been making lower top, lower bottom formation in last 6 series. However, in this series, it managed to hold the support of around 680 and recovered to a 750, 760 kind of level. But still, it's very tough to say that the stock has formed the major bottom to start the next leg of rally. However, we are expecting a small pullback, which may take it to 777. Above that only, we might see some short covering round, which may take it to 800 kind of level. So holding above 777 only will give the precise or the decisive move in the counter to play on the long side. Talking about the other stock like Sun Pharma, as you said, I think after the underperformance of last couple of months, the stock is now finding multiple support. In the last 3 to 4 months, the stock has managed to find support near to 620 zone. and now all set to surpass its multiple hurdle of 685. So I think if this stock sustains above 685, then immediate bottom will be worked and the stock might see a recovery to a 740-50 kind of level. But again, remember, these are the volatile counter, moves up or down because of the events or the certain news flow. So traders can follow the trading level as well. As I mentioned, the 685 would be the immediate hurdle. Above that, one can go for the buying interest in the Sun Pharma.
All right, stay cautious as well as maintain your stop losses if you initiate any positions in the futures and options market. That's the view coming in from Chandan. Chandan, let's also talk about the IT space then, which was buzzing in the February series. We had TCS, which announced a buyback post, which there was a sudden surge seen for the stock because the buyback price came in at about 2,850 rupees. And there was a rub-off effect, which was actually seen for the likes of Infosys, which currently trades above the 1,000 levels. What is your view on the sector, and are there any stocks where you see any trade?
Yes, talking about the Infosys, the stock has made bottom near to 900 zone at the beginning of this series and headed towards 1020 kind of level, and now it's finding hurdle near to say falling supply trend. So because of that, some decline might be there, but 900, 920 would be the best buying level for the counter. Overall, I'm expecting this range to be continued, so traders can use the decline for the buying opportunity. Talking about the TCS, the stock is up by around 5 to 6% in the entire series, as it managed to find support near to 2160 levels and rally towards 2550 kind of level. However, here also the follow-up buying is missing. We have seen sustained call writing, which is keeping the upside limited in the counter. So on immediate basis, it has support near to 2350 while hurdle near to 2550 zone.
All right, upside could be limited for TCS. Mind you, the acceptance ratio for the buyback, which the company has announced, is about 3%, and that is factoring in if the promoters also participate in that buyback. Chandan, there is one stock in this space which has done really well. In fact, if you look at Just Dial, that stock's up nearly 50% in last 1 month. How is the chart of Just Dial looking?
Yes, talking about the Just Dial, the stock has given a major breakout. It has formed the bottom and did well. It rallied by around 48%. And this movement is happening after the underperformance of last 3 years. Earlier, it was making lower top, lower bottom formation. We picked the stock near to 450, 460 kind of level, and it is continuously making higher top, higher bottom formation. So if we just talk about the immediate trading basis, it would be very tough to go long here because already it has rallied by around 50-60% and it is up by around 50% in the entire series. So buy on decline would be the best strategy for the counter. 480 is the positional support, while on upside this momentum may extend it to move towards 580 to 600 levels.
16% gains for Just Dial just about for this week. Good going there for Just Dial. One space where most of the analysts on street have turned bullish is the cement space, where after the finance minister announced that low-cost housing will be given infrastructure status, suddenly we've seen most of your cement stocks doing pretty well. How would you be approaching this space, Chandan? And are there any trades on the long or the short side that you would recommend the traders to initiate?
Yes, talking about the housing finance company, DHFL is a counter where we are keeping a close track. In the month of November, stock fell down post the demonetization from 333 to 214 kind of level, and it has recovered the entire losses made in the November, and now it's back to 330 level. So a strong recovery was seen in last 3 months, and now a hold above 330, 333 may take it to move on higher side. So the momentum and the breakout is clearly visible in the stock. We have seen built up of long position, so expecting this rally to continue towards 349, 350, while on the immediate trading basis 320 would be the support for the counter.
All right, that's a buy call coming in for Dewan Housing, so keep an eye on that. Chandan, what's the view on the cement space? Any trading picks there?
Talking about the cement, we have seen recovery from the lower levels in the Ambuja and SEC, but these stocks again started to witness pause in buying interest and some liquidation of long position is clearly visible in last 2 to 3 weeks. Talking about the Ambuja Cement, the stock has failed to surpass the multiple hurdle of 242 and given a weekly close below is 235 kind of support zone. So immediate the top is in process, it has broken a support trend line. So some sort of weakness might be there in the counter. So recommending to sell with a stop loss of 239 for the immediate target of 220 level.
Well, then let's talk about the sector which was in focus, and that is the telecom space. We've seen good gains coming in for the likes of Idea, Bharti, Airtel, Reliance Communication for the week on back of some consolidation news in the telecom space triggered by Jio. All of these stocks performed well, but for the week, I guess Bharti was just about down. Reliance was up about close to 10%, and those gains were actually recorded just for one trading session. Idea for the week was up nearly 13%. Chandan, if I were to ask you one stock which looks quite good on the charts where one can initiate a long position, which one would that be in the telecom space?
Yes, I'll be positive on Idea. We have recommended long position in the stock by trading 112 half call, as well as we have recommended to go long near to 109 level. This stock is rallied by around 57% in the entire series, and this buying interest is happening after the weakness of last 3 years. So the stock has seen the strong recovery and formed a positive price pattern that is called the flag pattern on the daily chart, and because of that pattern the stock has rallied by around 8 to 10% in last 2 trading sessions. So I'm expecting this momentum to continue. One can buy with a stop loss of 115 for the upside target of 127 level. Those who are looking for the limited risk can also trade with bull call spread by buying 120 call and selling 130 call.
Right, 127 is the target which Chandan is talking on Idea. Keep that stock in mind, as there would be some kind of news on the merger of Idea and Vodafone, which could be announced anytime soon. Let's talk about the other sector then, metals. Clearly, if you look at the Nifty Metals Index, that surged 25% from December 26 lows, which we got to see on Nifty. Metals has done really well. Chandan, are there any stock in this space which look good to you?
Yes, talking about the metal counter, most of these stocks are trading near to recent 52 weeks high. We have seen a strong momentum in the Vedanta, Tata Steel, Hindalco, Steel Authority, but now it's very tough to go long or go short at the immediate basis because the risk reward ratio is not favoring and the immediate trend is positive. So I'll wait for some decline to execute any kind of long position. Talking about the Vedanta, the stock is continuously moving upwards. It witnessed a V-shaped recovery which started in the month of Feb 2016, and still the stock is moving upwards, rallied by around more than 150 points. So risk reward ratio is not favoring now, so I'll suggest to keep the trailing stop loss those who are holding the long position. For the fresh long position, I'll avoid to wait for a decline in the counter.
All right, so don't initiate any fresh long positions on Vedanta, but have a look at Jindal Steel and Power. That stock surged nearly 45% in last 1 month. We've seen that stock trading at fresh 52-week high. Chandan, how's the chart of Jindal Steel looking? Would you advise traders who've initiated long positions to cover at this level, or one can look to enter as well?
See, talking about the Jindal Steel, most of the time stock come into the F&O ban period is significant OI built up witnesses in the counter. It has done well after the underperformance of last couple of weeks. It rallied by around 40-42%, led by positive momentum and the built up of long position. So on immediate basis, it has support near to 112, while on upside it can head towards 120 to 130, 120 to 124 kind of level. But again, one has to take care that this stock is a high volatile counter, so trading position should be followed by the strict stop loss. Talking about the entire metal counter, Hindalco is the stock where we have multiple support near to 178, and from last 4 to 5 trading session, stock has managed to respect the same level. If it goes below 178, then only we may see a selling pressure in the counter.
All right, that's the view coming in on a couple of your metal stocks. But the other space which was doing well is the tire space, and that is on back of tire prices coming down. In fact, the tire prices in Shanghai are down nearly 6%. Chandan, any view on stocks like Apollo Tyres, CEAT or MRF?
I would like to comment on the C8. The stock has made bottom near to 172 levels. That was the double bottom, and it has also surpassed its immediate hurdle of 1140 kind of level. That's why we have seen the significant jump in the prices, and the positive news flow is also supporting the buying interest in the counter. It is all set to surpass its falling supply trend line, and most of the tire companies are doing well, led by its fundamental trigger. So expecting this stock to witness positive momentum, recommending to buy with a stop loss of 1120 for the upside. Target towards 1200 to 1210 levels.
Right. Let's keep aside C8. I believe you had the call on that from the broader markets. Just getting a view on the broader markets, the Nifty Midcap Index also touched its record levels during the week. Any stocks from the broader markets which look good on charts currently?
We have discussed many stocks when we are talking about the certain sectorial outlook. In banking, we are positive on Axis and ICICI Bank. In tire space, we have given long position in the C8. We anticipate or we expect this stock has from bottom, and now the momentum might start in the next coming trading session. While in auto pack, TVS Motor is the strongest stock which is trading near to its 52 weeks high. This positive momentum and higher top higher bottom formation may continue to take it on higher side. While pharma and IT, we will be cautious. We will wait for some stability. In telecom space, we have also discussed about the idea which has formed the flag pattern, and this momentum extend towards 127.
All right, Chandan, thanks very much for joining us and giving us your views on the setup on how the markets could just pan out for the March series, as well as your views on individual stocks as well as sector. We appreciate you joining us. Well, with that, it's a wrap on this edition of World of Derivatives. Thanks very much for watching.